refinancing. Is this a good idea or not?
So we will talk about all of this. What is refinancing? What are the pros and cons? What are the pretty good things and the bad things, the ugly and the beauty? But before we start, I want you to let you know that we have some questions that we will answer them at the end of this video. So stay
Make
at
sure
the
stay
end.
with us because we're going to be giving some examples based on these questions so you can get a better idea if it's something you should be doing or maybe it's not for you.
So what is refinancing? It sounds very fancy, right? Fancy
Very
word,
complicated.
fancy, complicated, but what it is, in very simple terms, is taking your current mortgage, closing that, and replacing it for a new mortgage with a different interest rate. That's it. So you have
Extremely
now
simple.
a mortgage for your house or for I don't know, any property you own. You have a current mortgage with a specific interest rate, and might be locked for 5 years, 2 years, 10 years, who knows. So you close that, and because now the interest rate is lower, you might take advantage of this new interest rate. But for that, you had to close one and reopen one. So you can do it with the same bank or with a different bank.
Yeah. So some reason why people would consider to doing refinancing. The big one is reduce your interest rate when there are better opportunities in the market.
Yeah.
And second one, if you want to use some equity of your home, which is some money that you have there, if you want to take it out and use it for something, maybe pay your debts, maybe buy a yacht, or whatever it is you desire.
Yeah, but we will talk about what is the good reason to take this money out. So stay tuned, because maybe a yacht will not be the best decision. So for everyone that doesn't know what is an equity and want to understand better, equity is more like the part of the house that you own. Because when you get a mortgage, you say, okay, I have a down payment for 10%, 20%. So you own that part of the house, and everything else, who owns it is the bank. So when you start paying it with your small monthly payments, you will start getting a little bit of that house for yourself. So you might own one brick at a time. So that's equity. That's what you own, the piece of the property that you own. So the percentage. So you might be owning one bedroom of the house. Like, that's the idea. So some people own 50% of the house. They already paid for a long time the mortgages, and they have some equity. So what they can do is to close this mortgage and ask for a new mortgage for, I don't know, 80% coverage. But what happens is that you are getting rid of this equity that you own, and you are giving back the power to the bank. So you are saying, okay, here's the house again, give me the money, I will give you the ownership of the house. That's kind of the idea of the equity and how it works with the mortgages.
So there's now some things that you have to know before you go there. We're going to determine later on if you should or not, but first few things that you need to know, there's some expenses that you should ask before. So there will be some legal fees associated. There will be some appraisal fees might be associated, depending if you go with the same lender or you're using a new lender. But if you'll be taking money out, there will be appraisal fee associated because they need to know how much your house is worth right now. So when Kate was talking about the equity, just so you know that you can take up to 80% equity from your house.
Yeah.
So that's the maximum. So if you put a down payment of 20%, you have 80%. That means that you cannot take anything out because you owe 80%. If you put 30% down, and now you have 70 in debt, so you still have 10%, you can actually take. So that's kind of, so you know, if that's why they need to appraise, because if even if you used to owe only 20%, but your property got more expensive with the years, so then you probably, even you were paying the regular payments, but actually you have much more equity because your house cost more. So this is why they have to appraise. And also maybe your house went down, so they need to make sure that you still have some room to be taking money out.
So all of this will be considered as a closing cost. So the appraisal, the legal fees, the lender penalties is for the older mortgage that you are closing, because you need to close the mortgage, and when you cancel that one, you will pay penalty to open a new one with the same bank or with a different bank. You will always have closing costs.
Yes.
But the tricky thing is that some banks will tell you, no closing cost. No.
Don't worry about it. You'll not even feel it. You're not going to see it. But there's always closing cost, and they will put it in your payments. So if your mortgage, let's say $200,000 and the closing cost is $3,000, your mortgage is going to be $203,000.
Yeah.
You might not see it in the payments because your interest rate went lower, so your payment went lower. So they'll say, hey, don't worry about it. But it's there.
It's
just
there.
So you know.
It's just hidden.
Yeah, so always make sure, yes, because when you're going to be calling and asking, they will be extremely nice to you, like you're their best friend, and they're going to give you only the best things about this refinancing.
Because they care so much.
Oh yeah, they'll love you because you're going to be paying a lot of money to them.
Yeah.
So make sure you ask these questions. Don't be shy. This is something you really have to know.
And you really need to know it, the closing cost, because here is where you know if it's worth it or not, all this movement of money.
So usually the closing cost, let's take 4,000. If your interest rate was lower now that you refinance, and you were able to pay this 4,000 in about a year and a half, in a year and a half, up to 2 years, that means it was worth it.
Yeah.
So after 2 years, you finish paying the closing cost, you already, all the rest, it's already savings.
Right.
You're going to pay less for interest for the money that you borrow. Mm-hmm. So in this case, it is worth it. Then you should be thinking about taking.
Yeah. So now we will talk a little bit more about what do you need to know before you decide to go through this refinancing. And we will give you some, also we will answer the questions that some of the members in this
lovely
groups,
members throw at us.
Yeah.
Which is great. We love these questions because with the questions we can give better examples that may be more specific to you and get your brain going to understand how everything works much better. So what do you need to know even before you calling these people and asking these people, I mean the banks, your creditors.
These people.
Anyway, in overall, they're helping us to buy our houses faster. You don't have to be saving for 30 years and then buying, but you really want to be educated to know if there's anything out there. So thing you need to know, your credit score. A lot of depending on your credit score. If your credit score is bad and it's below the required, you don't want even them to start checking because it's going to reduce it by some points every time they're doing a credit check. Plus, you'll know that if you have a bad credit score, you won't be able to refinance. So if you were able to get first time mortgage and your credit score went lower, now you might not be able to refinance. So few things that you have to keep in mind. You have to start making sure it's going to get better, because when your term going to end and you will have to be refinancing, you're going to be in trouble. So get this credit score better. And another thing, current interest rate. So again, this is one of the biggest things that's why we're all thinking about refinancing. Search, you don't have to go with your bank. Look maybe other banks, maybe they're going to offer you a better interest rate. Usually they will, because they want to earn you as a customer.
Yes.
So they will do their best to give you the best interest rate. Your
And
bank,
there might be a fight, right? You will tell the bank that you are currently with, you will say, oh, I got a better interest rate here. They will say, no, 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 but let me do something for you. And they will call you back and they will give you a better interest rate. So you might see a little bit of a fight
pull here and there, yeah.
if you have a very good credit score. If you are not very good with your credit score, they might not be fighting for you too much.
Yeah. Yeah. Another thing, you need to know the closing cost. So make sure you ask, even if they say, yeah, don't worry, you're not gonna feel it. You have to know this number, so you'll be able to calculate, is it worth it or not?
Yeah.
And the last one that you need to make sure, if with your new mortgage, when you deal with the refinancing, if you can do lump sum payments. Because this is important.
And especially for the people that are taking some cash out of the equity to pay debt. Because if you are paying your consumer debt, if you are paying all this lifestyle debt, it's not investment, right? Your house might be considered an investment. Yeah, we say might because there are a lot of things related to the actual value of your house that we talk in our program, all the investment idea of housing. Sometimes people think that a house is an investment and that's it. Sometimes it's not. It might be a very bad debt for you, depending on the value of your house and a lot of other things that we talk about all of this in depth in our program. But if you are taking some cash out of the equity to pay your debt, you have to know that this is not part of your house value. It's not part of the value of the property. So you wanna pay it as fast as possible. So you don't stretch it too long to continue paying interest. You have to be responsible and pay as much as you can with this whatever money you have collected, just go and pay it to your mortgage. But because this mortgage will consider all your debt, it's everything there together, right? So you just want to get rid of it as fast as possible.
Yeah, so one of the questions that we got, one was from Oscar.
Yes.
He asked, is it worth refinancing if the rate difference is only 2% or less? So 2%, it's a huge number.
Yeah.
For example, if you had previously interest rate of 5% and now you can get 3%, this is huge difference in your interest rate. If you do the refinancing, let's say at 2% interest, and your closing cost $4,500, and your mortgage, let's say $300,000, you will be able to pay this $4,500 probably within a year. So then, if let's say you're gonna be refinancing and your term gonna be for next 5 years, so in first year you're already gonna be pay the $4,500 that it cost you to do the refinancing, and the other 4 years you're gonna be saving a lot of money in interest, which 2%, it sounds not too much, but it is a lot of money. So 2%, again, you need to do calculation, but overall it's great opportunity to save a lot of money. So just let's say if you have $200,000 mortgage and you got reduction in 2%, so your payment, I don't know, for example, was $1,700 a month, it will go lower by maybe about $300 a month, which is huge. You're gonna have $300 extra that you don't have to pay for your mortgage.
Yeah.
So if you decide to do this way, it's great. Better way to do it, if you don't actually need the reduction of the payment and you keep your payment in the same level, you might cut 5, 6, 7 years of the length of your mortgage. So if you were paying 25 years mortgage and you got 2% reduction and you keep your payments the same, you might shave 5-6 years. So instead of
Which
paying,
is a lot.
that's a lot. Instead of 25 years, you'll end up paying your mortgage in 19 years. So you will be free from it much faster. So 2%, it's very substantial. So if you do have interest rates like 6, 5, you should be definitely looking into do something like that. But again, consider all the things that we said before. Check how much it will be the transfer. Make sure your credit score will allow you to get this better interest, because the bank will provide, let's say, 3% interest now, 2.5%. But if your credit score is bad, they'll say, sorry, my friend, we can give you 4.5%. At 0.5%, it might be not worth it to be going through such changes.
Yeah.
So for people, especially in the situation right now, if you, at the end of your rope, you maxed out all your credit cards, all your debit cards, whatever you could, and you need some money, this will be a great time to refinance, but I'm gonna talk about it for next question.
Yeah.
So for now, we have another question from Eli, and he is asking, are there any fees involved when refinancing my mortgage? So yes, there's always closing costs, there's always fees, like we talk about it. So always, again, make sure that you ask, that you find out, so you know.
If they tell you no, there is not, ask again and say, I want to know what is the closing cost, because they will have them. And you need this to compare if it's worth it or not. So before you make any decision, you need to know the closing cost. Plus, you need to know the interest rate for the new mortgage and the interest rate that you are currently paying. So then you can compare.
Yeah.
If you cannot compare, don't make any decision, because these are the 3 things that you need to be like super understandable.
Yeah, and from what we've seen, there's some banks. So let's say if you're going from one bank to other bank, because they want to earn your business, they might cover some of your closing costs.
Yeah.
Some say we're gonna cover up to 3,000. So then if the closing cost 5,000, they will cover 3,000, and you end up just paying 2,000, which is great for you. So if you're gonna be starting with the new bank, always ask them, would you gonna help me with the closing cost? After they told you how much the closing cost will,
Yeah.
because you're gonna demand to know, right?
Yeah.
So after they told you, then you can say, okay, now are you gonna help me to cover some of that?
Yes.
And by cover, I mean, don't show me the payment and say my payment gonna be much lower. Show me how much money you're gonna take it away and pay actually. So not just there. So this is few things, and I'm gonna jump to the next question.
Yes.
Next question is from Sharon, and she's asking, can I add my credit card debt to my mortgage when refinancing? It says financing, but I'm pretty sure she's mean refinancing. Okay, so can you add your credit card to your mortgage? Yes, you definitely can, but again, this is only in the worst case scenario.
Yes.
Because we've seen people again and again, they paying their mortgage, the house prices go up, they saying, look at this, we have 30,000 in equity, and we're here paying huge interest on our credit card, we paying 10,000. Why not? We do refinancing, we take 30,000 out, we put 10,000 on our mortgage, and 20,000 we're gonna go party.
Yeah.
No, please do not do it. That's because you took the debt from here, from this pocket, and you put it in this pocket. The debt is still there. Maybe it's invisible because you have less payment, but it's there. So I would say to the people that right now in this situation, if you lost your job,
Yeah.
if you don't have any emergency fund for these kind of rainy days, you don't know what to do, you have people calling you and saying you owe me rent, you have to pay your credit card. So what do? You don't want to ruin your credit score by not paying all of these people, and you know you have some room, you have some equity, plus the interest rate is much, much better. So this might be a great time to take all these debts and just put it in there. So take equity out. Let's say you have your interest rate, your line of credit and credit card, 30,000. Just take the 30,000 out. When you're refinancing, get better interest, which will bring you lower payments or same payments, but will shorter your time frame of paying. With the new 30,000, maybe not gonna shorten it by too much, but you'll be able to pay your credit card, you'll be able to pay your line of credit, you'll be able to pay your rent or mortgage, whatever it is. Well, obviously not rent, because if you have a mortgage, then you have to pay your house.
Yeah.
But you'll be able to take some money and put maybe for your rainy fund, because okay, now I don't have job for another 5-6 months, so I will have some money to continue.
Yeah.
So this is a great idea to do it, but always remember, whatever money you didn't use, put back into the mortgage. That's why you need to ask if you can do lump sum payments, because this is debt. You add in debt. And especially now, if you're not gonna do it now, the houses market might start going down, which means that your equity gonna be shrinking and shrinking. So if you need to do it, you should be start looking to do it the sooner the better, before our house is gonna start losing a lot of value.
And again, and again, and we repeat it in every video. If you are making enough money to pay your debt, if you are not in a crazy situation that you are desperate, that the people calling you and you might go bankrupt, don't put your consumer debt into your mortgage. This is not a good idea. You have to continue paying, change your habits, change your lifestyle, be responsible, commit to the payments, and get everything done, because it's just moving the debt from one place to another. You are not paying the debt. If you it's like a very fake feeling for the
fake feeling of freedom.
Of freedom, because you will not see the debt. You will take the money from your mortgage, you will pay all the credit cards, all the debt, and it will look so beautiful.
Suddenly
and
you
so
have
free.
less payments because you don't need to pay the credit card and the line of credit, and you say, it's all zeros. Oh, I can go crazy again.
And
but
it's
no.
like, I paid my debt, I'm doing so good, I'm so responsible, I'm such a good person. No.
Your bank paid the debt for you, so the debt means it's still yours.
And now you owe the bank. And also, if you are planning to move from the house like in 2 years, it will not be a good move, because it's only if you are planning to stay in the same house for long term, because then you will see the benefit. If not, don't even try to move anything. Especially for all the immigrants out there, the ones that are crazy like us, that are moving around and never know what is the actual place for you to call home. Maybe refinancing is not the right option if you are planning to move. So keep it in mind. Keep it in mind, and if you decide to go with the refinancing, make sure you burn everything else, all the plastics. Burn everything. Close all the options that you have with this line of credits. Don't make yourself be like with the kid with the candies all around the house.
Hide the candies like they don't exist. Your eyes don't see it. It's better for you. You can keep away from it.
And commit to it and pay your mortgage, and make sure that you are not getting into more debt, because that's why people get so like into a bigger hole, because they refinance, they think that they pay the debt, everything looks so clean and beautiful, your credit score is even better than before, and then you think, oh, I'm doing good, but it's just a fake freedom. It's a fake freedom, and you need to commit to that. You will need to change your habits. You will need to change the way you see money, the way you see credit, the way you think of wealth. All of this is a bigger picture. It's not just moving money from one place to another. It's everything. You had to work in your discipline, commitment, have a vision, knowing why you are doing all this stuff. So all of this we talk in our program to all our members, to all of the multicultural families that they are looking for a better life, this dream life that they are dreaming of. They are going far from all the system, the ideas. They are coming with a different vision, and we are helping all of you to continue with that vision and don't get lost in this life that looks so appealing for all of us. For us too, we always work in our discipline. It's not that one day you become disciplined and that's it. You have to work every day.
But the more you get used to it, the easier it gets. We still have our days when I'm seeing a beautiful car and I'm like, I want this BMW. I just can't help it. But I'm not going to buy it.
Yeah.
We didn't cut everything out of our minds. We still think about it, we dream about it, but we know we have priorities, we have other goals. When the time comes that our goal is going to be buying a fancier car, a fancier boat, not that we have one, but one day, then we're going to already start following that. For now, our priority is different. For now, we want to make sure we have our freedom life. We don't depend on anybody, and we want the same for you because this is the best feeling. Buying a new toy, this feeling gonna be for a week, month, maybe. Freedom, feels
it's
great
priceless.
Forever.
Yeah.
Every day you wake up, you're just a happy man,
Yeah.
a happy woman, a happy person.
Happy
So,
family,
yes.
happy wife, happy life.
Yeah. So in one sum up, kind of this big question, should you refinance? Only from the right reasons and if it makes sense. So if you can save 1.5%, 2% on your mortgage interest, definitely great idea, especially if you're staying in a house long term, is great idea. If you just want to get more money so you can go spend more money on things you shouldn't be spending, do not do it.
Oh.
Do not do it because it's gonna come and bite you.
Yes.
Yeah, so I think that's all for today. I hope you're all safe, healthy, and happy. I hope you have a lot of family time. Maybe not everybody, somebody like, okay, take me out of here. I'm ready to go back to work. I'm sick of these people. I'm done. For those, hopefully it looks like things slowly start reopening. But I hope you enjoy the time at home with your families. Stay safe, stay happy. And thank you for watching us. We always appreciate it. We love to see new members coming in, new people that want to learn about this and that and whatever we talk about. We love to see you. So thank you so much. Leave some comments. Tell us if you enjoy these videos like this, if you want us to continue doing it. And again, if you have any questions, we're here. Feel free to ask.
Okay. Have a good day.
Bye.
Bye-bye.